These videos and accompanying PDF package have been prepared by Patricia Malia. Personal use of these items is welcome. However, any use of these videos and package for commercial or monetary gain is not permitted without express consent from the author. Financial accounting is about taking the information that a company has due to its financial transactions and recording them such that we can put them into a format that everyone can understand. The format that everyone's come up with, that we all understand, is 4 separate financial statements. We're going to concentrate on the first part of this course on the 2 main financial statements. The first one is the statement of financial position. This statement is also known as the balance sheet, and it's known as the balance sheet because of the way it balances. We have here total assets for 2014 of XYZ company equaling exactly the same as its equity and liabilities, $979,500, perfect balance. The second statement we're going to look at is the income statement. In this case, it's called the Statement of Comprehensive Income. If it's called the Statement of Comprehensive Income, then we know that this company is a publicly traded company. Its shares are on a publicly traded market. So what are some things worth noting for our Statement of Financial Position? Well, the first thing with this statement is we should note that it shows the year 2013 and the 2014 year. In other words, this is a comparative statement. We want to see not only how we're doing this year, but how we are doing compared to last year. Another thing to note with this statement of financial position is that this statement is as at a certain date. This one's as at December 31st, which is the usual year end for most companies, although it doesn't have to be. This means that here we have cash and cash equivalents with a value of $2,500. This $2,500 is the value on December the 31st. It may not be the value on December the 30th or January 1st. So very important to note that these are the amounts that were in these various accounts at this particular date only. The other thing to notice is that we are going to split up everything based on what are the assets and the liabilities and equity. Those are our 3 main sections on the balance sheet. The assets always have to equal the total of all the liabilities and the equity. The other thing I want you to notice is we have further split things up between current and non-current. A current asset is one that will either disappear or go into cash within 1 year. If you look at receivables, receivables are amounts that companies or individuals owe us. We hope that we will get cash from those within the year. Similarly, for our current liabilities, these are liabilities that we will either pay or they will otherwise disappear within a year. Whereas our non-current liabilities are those things that we borrow but don't have to pay back within 1 year. We will talk about what all of these accounts are and how we put these amounts into these accounts in another video. Right after this one, we're going to talk about the income statement or Statement of Comprehensive Income.